Alphabet's second quarter earnings, they are just crossed the wire, so let's get you those results. Q2 EPS 231 versus an estimate of 218. It looks like revenue 96.43 billion versus an estimate of 93.97 billion. I'm just looking at Google ad revenue, 71.34 billion. The estimate was 69.71 billion. Turning to different segments, Google Cloud revenue, 13.62 billion. Estimate was 13.14 billion. YouTube ads revenue clocks in at 9.8 billion. Street was closer to 9.56 billion. Also looking ahead, they are seeing full year CapEx. They're now looking for about 85 billion. They had seen about 75 billion, and the street consensus was more like 73 billion. Just looking at how we're getting instant reaction here in the after hours. Remember, this stock was basically flat year to date heading into this print. Right now, down about 0.5%. Dave, you're looking over these headlines like I am. Your immediate response, Dave.
Yeah, no, so I was looking at their actual reaction to the stock, and at first it looked to be positive. To your point, as you're going through the headlines, sort of the top line numbers look pretty strong. But then when you kind of begin to peel back the onion, and we'll need to see more to come on the call, that CapEx spend number coming in well above street expectations and what was previously guidance, is definitely a bit concerning, especially when we're seeing nice growth from important segments of the company, but not necessarily gangbusters.
It's interesting, Dave, because heading into this print, like I said, you were basically flat year to date. Couple different issues. One was AI search, right, and where they are in this AI market. The others was this monopoly lawsuit. It does seem like we'll have some immediate questions, though, about this CapEx number, Dave. Again, it looks like we're looking for full year CapEx. Now they're calling for about 85 billion. They had seen 75. The estimate was 73.
Yeah, no, exactly right. I think in general, the question that we've had heading into this earnings season, and I think it's we're not alone here, is just how much CapEx is going to continue to come, right? So this is an arms race, right? We're still in the very early days of building out data centers, building large language models. At some point, though, there's going to be a preference that either corporations have or consumers have on sort of what AI models they want to use and how does that sort of all play out. But for the time being, every company needs to continue to plow ahead here. But seeing I'm going to be very curious to see, well, what exactly are they planning to spend this on? Is there something new? Because again, we still don't really know exactly what's going to happen with that monopoly lawsuit and the impact that could have to Chrome.
Some more headlines coming out, Dave. They talk about how cloud annual revenue run rate over 50 billion. Of course, in that space, they're competing with the heavyweights like Amazon, like Microsoft. They talk about how they continue to see strong performance in YouTube. They talk about how AI is positively impacting every part of the business. I mean, the worry there, Dave, one concern has been about how AI will impact search, will impact Google's bread and butter. How do you think about that dynamic?
Well, I think that, again, they're a company that sort of has the ability to sort of integrate AI into a lot of different operations, right? So they are not, Alphabet's not a pure play company, right? So obviously we know that it's dominated by search and sort of the ad revenue there, but YouTube has been a really bright star for it for some time now, and the ad revenue that can come from there. And if you can begin to integrate AI into sort of those products and systems, it's going to make their business benefit pretty markedly. But at the same time, they face this existential threat of, is there going to be something new, the new when it comes to search, right? I know, like a lot of folks, I'm using ChatGPT and other tools above a browser more and more. And at some point, that's going to have to kind of come to bite them. But that's why they're kind of really so focused on sort of integrating Gemini into all of their different products and offerings.
Just your immediate thoughts and reaction to the results, Dan, with the stock under some pressure here, at least initially.
Yeah, it looks like it's that CapEx spending, that extra $10 billion that we're seeing from the company. There's also, they saw the growth on both the cloud side as well as on the advertising side. I think the positive AI commentary is important given that they're expanding that CapEx. But, as you guys are talking about, there's no real understanding as to where that extra spending is coming from. Is it because of tariffs? Is it because of something else along those lines? Are they investing more into other companies? obviously they had purchased Windsurf, got in on that. So is it more along those lines? Is it the hiring? Where is this spending going? I think that's where people really want to know what's going on.
Rohit Kulkarni is here with us to talk more about that. Rohit, the at least the initial reaction here after hours, stock's at about 2%. As Dan was just mentioning here, Alphabet sees CapEx, full year CapEx about 85 billion, Rohit. They had seen about 75 billion. The street, I don't know where you were, Rohit, was more like 73 billion. What do you make of the results? What do you make of the reaction so far in the after hours?
I think fundamentally, I think we are seeing acceleration in revenues in a very large company. Google search is accelerating, YouTube growth has accelerated, Google Cloud has accelerated, and even subscriptions have accelerated. We agree that last Q2 there was slowdown, but they are compensating for acceleration, and we are not seeing any sign of existential issues that investors have been focused on as far as AI search is concerned, or what ChatGPT attention is taking away from Google. Having said that, I think the stock reaction here is a knee-jerk reaction about where are you going to spend those extra $10 billion, and what is the ROI that you're seeing from the existing spend. That's a sentiment that probably drives a lot of other mega caps, in my opinion, Josh, where Google is probably generating the most amount of cash, and they have the cushion to spend that cash. But we would love to know, is this an indication of supply chain constraints are easing up, that more chips, more power, more data center room is available, so they're able to spend more this year? Or is there something new or fresh from an investing standpoint that they have found?
So Rohit, when that question is asked on the conference call about this CapEx, about 85 billion, they had seen about 75 billion, what do you think they're going to say to that, Rohit? How will they explain it, do you think?
In my opinion, what they will cite as a kind of proof point number one is, look at our results. Our results show acceleration in advertising revenues, in cloud revenues, and if we are seeing acceleration, it's because of some of the investments that we did over the last 12 to 18 months, and the investments that we are planning to do more of, those same investments give us more confidence of a bigger return over the next 12 to 18 months. I feel that this is a show me quarter that everyone was piling on Google about fundamentals showing any signs of cracking from a revenue standpoint, and we haven't seen that at all. I think from a revenue upside, this was as comprehensive of a revenue beat as we have seen from Google in the recent past.
You know, other big tech names, Rohit, I'm thinking about Meta. Now, they'll spend, but some of your colleagues on the street, Rohit, they'll say, well, we like that spending because we can see where it's positively impacting results. Talk about users and advertisers. Yep. Would you say the same about Alphabet?
It is, although we don't have a full disclosure in terms of what it is actually helping from a usage engagement and all the things that we want to see. But from a revenue standpoint, yes, I think, Josh, objectively speaking, revenues are growing faster than what we would have expected. That's translating to higher earnings and more operating cash flow. So overall, I would be buyer on this weakness. I think valuation remains reasonable.
Shares of Alphabet are rising this morning after initially falling as the company announced that increase in CapEx spending for the full year. It now expects to spend $85 billion this year. That's $10 billion more than the previous forecast. And CEO Sundar Pichai reassuring Wall Street that the investments are necessary to keep up with strong customer demand. Here with more is Mark Shmulik, Bernstein Internet Equity Research Analyst, and still with us, Dan Ives from Wedbush Securities. Mark, I want to get to you first because it is interesting that initially the street, the stock reaction was sort of negative to that bigger CapEx number, and then it seemed to be, okay, we're convinced that it is necessary and it's supported by demand. How are you thinking about it?
It's about time. I get the shock. It's a big step up. It's very ungoogly. The kind of $10 billion step up in CapEx. And I imagine some of the algos saw kind of the free cash flow compression, driven by that step up in CapEx as well. But this has kind of been a place where every single kind of mega cap has been talking about the risk of underinvesting is greater than overinvesting. And I think that's doubly true in Google's case, given kind of search is front and center and what they're trying to do with their cloud business. I think it's about time that they stepped up that investment. And I think this shows a slightly different, perhaps more aggressive side on Google that, at least for my seat, was very well received.
And so what does this do for them? If I'm an investor and I'm looking at this increased CapEx spend, and where are they deploying it? What's the sort of ROI on doing something like this?
Yeah, I think for now the ROI looks really good, right? And you've seen that in kind of the acceleration in the cloud business, not just on GCP side, but kind of the bundling of Gemini into Workspace. You've also seen that on improving kind of core performance. Management spent a lot of time talking about engagement improvements on kind of AI overviews, AI mode, the Gemini app, et cetera, and how that's monetizing it, at least for now, AI overviews at a similar rate. So the ROI today looks really good. The question is, does that continue, right? How are they acquiring kind of GPUs and TPUs on the capital side? The allocation kind of seems to be kind of 50-50 between the cloud business and core. Does that mix continue on a similar dimension? So I think that's still an open-ended question. We're cautiously optimistic that current ROICs continue, but we'll certainly see.
And then Mark, on search, does this quarter show that the kind of rumors of the death of Google search have been greatly exaggerated?
This has kind of been consistent, right? They haven't missed a quarter in search since ChatGPT launched, 2.5, almost going on 3 years ago. This stuff takes a long time, and perhaps revenue is a lagging indicator. I know there's been a lot of focus on paid click growth, which also accelerated. But then we've got YouTube accelerating and improving as well. So we'll see what happens over the next 2 weeks when the rest of the digital ad sector reports. We think it's probably going to be pretty good for the entire sector. So it's more of a secular trend at the moment of just strong digital ad growth entirely. But this seems to be one of those things where it's kind of been, instead of slowly then all at once, it's kind of the opposite. It's all at once of all this fear and all of this behavior change. But then to actually shift behavior from here, shift dollars, like that's a much slower process. And in the meantime, I think Google search is executing very well on what they can control.
Right. Dan Ives, when you go to search something, do you Google it? Do you ChatGPT it? Do you Claude it? I don't know.
It's a combination. I mean, look, but I think those are great points. The reality is that you look at Google, they're back at the cool kids table. And they're stepping up. They're no longer in the corner, where the view is they're on the defensive. They're on the offensive. 10 billion step up CapEx, great numbers on search. I think there's a $25, $50 upside from here. And I think it just shows, this is an AI arms race. You cannot be on the outside looking in. We've talked about it.
Yeah.
The AI party, 10 p.m. It was 9 p.m. That party goes to 4 a.m.
Right.
Last thing you want to be is on the outside of the party looking through the window.
Who's winning the party right now?
He's wearing a black leather jacket. The godfather of AI, Jensen NVIDIA. Next to him, obviously, is Nadella in terms of what we see in Redmond. Of course, Zuck and Meta in terms of what we see, especially as a wartime CEO. But it goes back to who's on the outside looking in. Apple's like, hey, can we get in the party, cook? You got to do an acquisition, Perplexity, to do something big. Tesla, transition. Alphabet, they just got, right now, Alphabet, they got let back in the party.
They just brought a case in. Everybody's happy to see that.
So the velvet ropes opened up, and now soon they're back on. They're in the dance floor with Jensen.
Mark, what's interesting to me is that looking at your note in reaction to those Alphabet earnings, you're still on a neutral rating or neutral equivalent rating, but you seem to be waiting for the signal to maybe get in there. What's that sort of last piece that would make you get a little more positive?
Yeah. Look, I think the debate has kind of been ongoing, not just about kind of AI, but just the changes in search, and is Google being aggressive enough at effectively recognizing it? To kind of use Dan's expression of showing up to the party. We use that in our note too. It's, they're fashionably late, but there's still some dance time left. So, we think there's still enough time, but they need to kind of continue this aggressive tone. You're looking at kind of the stock reaction here. That's pretty tepid after what is otherwise a pretty solid print. And, we've still got that remedy ruling tied to the search case that's just hanging over the stock. We expect that kind of ruling here in August. Yeah, really hard to own the stock in kind of in big size, kind of waiting for that through the summer holidays. So we'll see where kind of, that lands. And then just whether Google can continue to be aggressive and, take share. In an absolute basis, all the numbers look really good. What we don't really know is what's happening from a share dynamic perspective. I think you just take a look at the top of the app download charts, and ChatGPT is still right there. So they haven't really gone anywhere. So yes, right at the moment, tide's lifting all ships, but we really want to make sure that we can get through these remedy hearings, that we can continue to see an aggressive Google, and that they can stem the losses over to ChatGPT.
And Mark, you mentioned the antitrust decision that's expected in the next month or so. We've talked to some analysts who say, break them up, it's fine. That Google actually will be okay, and maybe even better. Dan's shaking his head, but Mark, I'm curious to get your take on this.
Yeah, look, there's certain parts you could break up where, it's the sum of the parts is greater than kind of the whole. And I think, we've certainly gotten a lot of requests for sum of the parts analysis. And it's true, right? You do get that conglomerate discount. But the way you think about kind of where Google can get broken up here, particularly in the search case, the two assets on the table are Android and Chrome. You're talking about distribution of search. I think that's not something you can afford to lose at the moment.
The current business, meaning like search right now, this quarter shows is still performing.
Yeah, and search doing very well, and that was flagged heading into earnings because there's a lot of competition with AI. I mean, personally, you can just go to ChatGPT and ask them a question, not necessarily Google, and you're hearing that more and more anecdotally, but the search business was up year over year. It's something that analysts had flagged. We also saw really solid growth across the cloud, obviously a big standout here as we talk about chip demand and AI demand. Also YouTube, and YouTube is the biggest non-premium audio and video platform in the world. It's been consistently cited by the top streamers, including Netflix, as the biggest competition there. So YouTube just continuously outperforming here, also has that ad revenue. And when you look ahead into the future for a company like YouTube, they're taking over more share of TV viewing time. So that's significant as well. Pivotal Research raised its forecast, its price target also to $245 a share. They also said that the risks for the future, which come amid AI competition along with those regulatory hurdles, that's really been priced into the valuation at this point, and that Alphabet shares are currently inexpensive at the current moment. So we talk about the Mag 7, we talk about the future here for companies. It seems like Alphabet, Google, it's just sitting in that sweet spot right now.
Josh, let's talk about also the AI averse, or that's a terrible name for it, but hopefully you have a better name for it. But, meaning they're spending a lot of money looking at where they're spending that money.
Yeah, Julie, it was the first thing that popped out to me out of the release yesterday, right? Boosting CapEx to $85 billion, and it didn't stick out to me necessarily from an Alphabet perspective. It stuck out to me from a broader market perspective. If you listen closely to strategists that have been arguing for this broadening of the stock market rally and picturing areas in the market like utilities, like energy, what they're really talking about is, well, big tech continues to spend on AI. They're going to need to have energy to operate those to operate those AI platforms, right? They're going to need utilities. They're going to use nuclear energy. They're going to buy more chips. That's a semis play as well. This is something that Savita Subramanian and the Bank of America team have essentially been pointing out for over a year now, as they've been talking about a broadening of the stock market rally, saying most of the spending in the S&P 500 right now, over 90% of CapEx, is coming from the large hyperscalers. Those are really the only companies that have been boosting their CapEx spending. But that's a good thing for the broader market because one company's spending is another company's revenue, right? And you've started to see this play out in the market. We should point out the S&P 500 equal weight, which is not overly influenced by large market cap companies, right? That sort of shows some broadening of the rally. That closed at a record close yesterday for the first time in 2025. So we've seen this rally starting to broaden out during earnings. We talked about GE Vernova with a Nest yesterday. That is sort of an AI energy play, right? That stock has been soaring. You're seeing these little bits and pieces starting to come through. And so from a broader market perspective, if you're a bullish investor on the broadening of the AI theme, Google continuing to spend and spend more is seen as a positive for the market. Whether that is a good sign if you are an individual Alphabet investor, we can leave that up to the analysts you'll be speaking with over the next couple hours.